back to Dollars and Cents with Freedman Financial on North Shore 1049. My name is Marc Freedman. I'm President and CEO of Freedman Financial, located in Peabody, Massachusetts, right across the street from the North Shore Mall and just above Alto Forno Restaurant. If now is the time for you to get serious about your financial planning, about your retirement planning, I'd encourage you to give us a call, 978-531-8108. That's 978-531-8108. If you want to learn a little bit more about Freedman Financial, what we do, how we work with our clients, I'd encourage you to visit our website. It's freedmanfinancial.com. That's Freedman, two E's and a D, financial.com. Go to the bottom of any page on our website and you can sign up for our free newsletter that comes out each and every Friday. Or one of the things that you might really like is a section on our website that talks about the different types of clients that we focus our attention on. And we're going to talk about that a little bit later in the show. But today, or during this segment, I thought I would share with you a letter that we put out to our clients this past week. It's our letter that we call our economic outlook for the rest of the year. Nothing fancy in the title. That's just what it is. Look, we're in the final third of the year. And if you turn on the TV these days, you look at what the talking heads have to say, you check your social media feeds, you go to Facebook, you go to LinkedIn, you go to CNBC or Bloomberg, or wherever you go to get your information on what's going on in the markets. You might think that the market is having a terrible year, that the market is having a great year. You just don't know, depending upon the way you look at stuff. Well, the reality is, folks, is that for the year, the market is doing tremendous. Tremendous. Though you would not think about it that way if you were to look at your statements. If you were to look at the portfolios in general that you've put together, whether it's through your 401k, through personal IRA accounts, an investment account, whatever it is, you might say, I don't feel like it's doing that great. And that's because, in many cases, we tend to forget that when we look at our performance on a one-year basis, and nobody should really be looking at the performance of their accounts on a year-to-date basis. That's kind of silly. Even 1 year is kind of too short-term. But when you're looking at performance numbers, usually the one-year rolling number is what people are looking at. We forget that we started 1 year ago in October to December where the market dropped almost 20%. So despite the fact that the stock market might be up almost as much as that, if not more, when you balance it all out, it's about even for the year. So when the talking heads start talking about the market hitting an all-time high, or markets having a tough year, or Trump doing this, or North Korea doing that, or Argentina, or whatever country is your favorite country to pick on these days, you're doing okay. So we wanted to kind of tie that back and bring that reality check back to our clients so that they understood what was truly going on. And I thought, frankly, to make it very simple, I'm going to read this letter to you. I'm going to read the letter that we sent out to our clients, which isn't very long. When we send out communications to our clients, and we do this regularly, one way that we send out communications, of course, is through our weekly newsletter called Planning Pointers. If you'd like to receive that, it lands in your inbox every Friday morning at 10:30. All you need to do is go to my website, freedmanfinancial.com. That's Freedman, two E's and a D, financial.com. Go to the bottom of any page on the website. Put in your name, your email address. Let us know how you heard about us. And then if you want to have some comments, you have a question for me, anything you want to put in the comment section, or nothing at all, that's okay. But if you do have a question, please know I respond to every single one of them. And I assure you, you will get a response back to those posts that you put in there within 24 hours. If you don't put anything in there, and you don't want a response back, that's okay too. I'm not going to call you. I'm not going to bug you. You're simply going to be signed up for the newsletter. You can read it. It's financial advice in a language you can understand. We talk about little tidbits of information. It can be anything from what's going on in the markets to whether you should buy or lease a car, whether you should consider buying a place in Florida or renting a place in Florida. Maybe it has something to do with college finances or how you spend your money or whatever it is. It's little tidbits of advice that talk about financial advice in a language you can understand. So let me share this economic outlook with you that we've sent out to our clients this past week. We call it the economic outlook for the rest of the year. And here's how it goes. With Labor Day in the rearview mirror, the kids are back at school, and those who make their livelihood in the financial markets have returned from summer vacation. It's a time where trading volume increases, corporate budget meetings ensue, and year-round planning occurs at a frantic pace. It's a recipe for increased volatility, political posturing, and outrageous predictions. And that's what we're hearing today. Despite what the headlines suggest, the stock market, as measured by the S&P 500, is not struggling this year. In fact, the index that represents the 500 largest companies in the United States is up over 20% as of the 5th of September. Many other major indices are delivering positive year-to-date returns, including the international and emerging market indexes. But how quickly we forget. It was less than 1 year ago, the fourth quarter of 2018, when economic sentiment was challenging. The S&P 500 dropped close to 20% in less than 3 months. But almost as quickly as the markets dropped, so too did they recover. It's not surprising that investors are uncomfortable with short-term performance. Look, there are some market challenges, and there are some global challenges. They include uncertain trade tariffs with China, a slowdown in Europe, and the indeterminate direction of interest rates. The stock market doesn't like uncertainty. In fact, it's among the primary factors that drive its daily movement. However, each time we've experienced a sharp market decline, it has always staged a quick recovery. It's a wonderful reminder that you should keep your eyes on the horizon and not the ripples of the ocean. But good news does continue. Consumer spending, what you and I spend money on, represents 68% of the U.S. economy. Americans are spending money like crazy. We're paying for convenience so that we can have more time for experiences. Thank you, Amazon. Unemployment continues to hover at an all-time low. In fact, some studies suggest that there are more jobs available than there are people who can fill them. Declining interest rates have lowered the cost of borrowing money for a mortgage or a business loan. And lastly, productivity in America is up, way up. When it comes to global financial policies, we can point to even more optimism. The Federal Reserve in the United States and the European Central Bank have both been very clear that they will pursue policies that will continue to promote economic growth. All of this bodes well for the stock market and your overall portfolio. Look, market volatility is as normal as the New England seasons. They are expected, but sometimes they sneak in with periodic climate surprises. Your portfolio is positioned to weather market cycles. We continue to monitor the investments in your accounts with consideration for the impact they have on your overall financial plan. Freedman Financial continues to remain very optimistic about the long-term success of our economy and your portfolio. As always, if you have any questions, please feel free to reach out to us. And that's a letter that was signed by both myself and my business partner, Marion. That's our outlook for the rest of the year and beyond. That's what we're thinking. We are optimistic. We are very optimistic. And I hope you realize that the idea of building a portfolio where someone says we need to build it based upon an asset allocation strategy. We're going to put some money in stocks. We're going to put some money in bonds. We're going to put some money in large cap, small cap, mid cap, international, emerging markets, short-term bonds, mid-term bonds, high-quality bonds, low-quality bonds, all that kind of stuff. It makes sense. We're diversifying. We're reducing and limiting and managing our risk. It's very important. Trying to chase the next Yahoo, or actually, I can't even believe I said Yahoo. Yahoo is so far out of the picture now. But the next Facebook, or Amazon, or Apple, or even Tesla, or one of these, Microsoft. You know, I think Microsoft is one of those interesting companies that people seem to absolutely forget about. They are a powerhouse of a company, probably one of the top 3 largest companies in the world. Yet when you're watching CNBC, when's the last time a broadcaster talked about Microsoft? They're talking about Amazon, or Facebook, or Netflix, or Google. Microsoft is just an amazingly large company. Now, it's not to say that I'm endorsing Microsoft or any of these companies. Frankly, as you well know, if you listen to the show, I don't endorse any individual stock holdings. Not my game, and I don't think it should be the game of any individual investor. Leave that to the pros, folks. Buying individual stocks is dangerous, is risky, and stock prices move for reasons unbeknownst to you. We have to have rationale. We have to have an understanding of why we're investing. And The investment strategy has to be aligned to our goals, not to say, oh, well, I'll buy this stock with hopes that it'll go up 20% or 30% and then I'll sell it. Well, the reality is, folks, when you buy an individual stock, history suggests this over and over and over and over and over again. When people buy individual stocks and they go up, nobody wants to sell them. But when they drop big time, everybody wants to sell them. Is that the right strategy? I thought we were supposed to buy low and sell high, but the average investor sentiment suggests just the opposite. You see, when you buy into a mutual fund or an exchange-traded fund, an index fund, when you hire professional money managers to build a strategy, to build a portfolio that's built with a collection of stocks or bonds or whatever, or a collection thereof, there is a lot more discipline built into the investment strategy. A portfolio manager has millions, hundreds, sometimes billions of dollars in their portfolio. And if they're going to go buy a stock, they're not buying 100 shares. They may be buying 1,000,000 shares. Yeah, really. They may be buying 1,000,000 shares. And do you think they just say, looks like XYZ stock's trading at 25 today. I think I'll buy it at 25. Just for the heck of it. No, they've got a plan. They have a strategy. They know what they're doing. They have a sell discipline and a buy discipline. They're hopping on planes and visiting the companies, talking to management, talking to the C-suite, talking to the people that have boots on the ground and are using their products to see, does this stock have legs? Does the product that they produce, the service that they offer, does it have stamina and the ability to be a great company? Not a company that's good for today, but a great company for the long term. That's how I would want to be building my portfolio, leveraging some of the smartest people in the business, not some person that says, hey, I can pick stocks better than the next guy. That's what a stockbroker says that they can do. Sometimes they're lucky, and other times they miss it. I don't want our clients, I don't think you should be spending your time in that speculative world. Let's allow portfolio managers, people that are managing mutual funds, companies that are managing exchange-traded funds or index funds, build a diversified portfolio that's reflective of a strategy that you want to achieve, but limits your risk, gives you liquidity, gives you daily pricing. That's important. The diversification is key. And as many of you know, a portfolio consists oftentimes of more than one investment. Not one stock, but more than one mutual fund, more than one exchange-traded fund, a collection of them. And when you buy, some people say, well, I got, 14, 15 stocks in my portfolio. Is that diversification? Well, if you own 14, 20, 30 stocks that are all comprised of the S&P 500, let's say it's anything from McDonald's to Pepsi to Coca-Cola to Bank of America to Microsoft to Amazon to Google to Caterpillar to Johnson & Johnson, all of those different companies. Do you have a diversified portfolio? You might have a diversified portfolio of sectors, but you have a portfolio that is still all-inclusive within the S&P 500. And when you watch the news and you hear the commentators say, the S&P was up today, the S&P was down today, that means your stock portfolio probably moved in that direction. You want to have more than just S&P 500 stocks in your portfolio. And that's why we encourage you to look at mutual funds, to build an asset allocation strategy that includes large cap and small cap, mid cap funds, growth, value, international, developed markets, bond funds that are high quality, low quality, short term, intermediate, a whole combination of different types of fixed income securities. You need that, but oftentimes you need the help of an advisor to guide you along the way. And that advice needs to be weaved into the overall financial story. Understanding where you stand financially, what you're all about. Well, perhaps you're at a different stage in your life. Everybody's at a different stage. When we get back, I want to share with you some stories about the different types of clients that a firm like Freedman Financial sees. There's all different types. We've got 5 that we focus on. We're going to talk about that when we get back. You're listening to Dollars and Cents with Freedman Financial on North Shore 104.9.